A bend in the road is not the end of the road unless you fail to make the turn. Helen Keller. And Ms. Keller is right. Don't give up. Keep practice. Keep doing what you need to do. Every day, 10 to 15 minutes a day is all we ask. Commit yourself to learning how to read stock charts. Think about the ability and the power you would have if you could accurately chart stocks. 10 to 15 minutes a day studying these charts. You know that what we do here is not rocket science. It's charting art. I encourage you to stick with us every day. You're not going to get the nuances, and I'm going to talk about that. Particularly, you guys have been wondering, why was I so pegged on a rollover on TLT all these days? Kept telling you to watch it, watch it, watch it. It was the one I was really focused on. Why? Why? Because it's been an incredibly successful practice trade so far. Why has it been that? Because of the nuances I have learned by charting every single day. That's what I'm asking you to do. Find the stocks you're interested in, the ETFs you're interested in, and start practice trading those each and every day. You will learn the nuances of those things over time, and you will understand more and more, and you will develop that sixth sense of, this is what I need to do now. And you'll be able to do successful practice trade after successful practice trade. Why? Because you've learned the personality of that stock or ETF. That's what I want you to develop the ability to do. It's not magic. It's not anything that comes but through your hard daily work. That's how you develop this ability. It's just that simple and just that complicated. Remember, all we're trying to do is figure out, is this ETF or stock going up or down? That's it. It's a binary decision, up or down. So again, we use these charts. We use the price percent oscillator, derivative oscillator, Bollinger Bands, Heikin-Ashi candlesticks, trend lines. We use all of these things to help us accurately follow trends. That's what we are practicing and learning how to do. It's important. It requires effort every day, 10 to 15 minutes. We're not talking about a huge, huge amount of time, but let me tell you, the number of people that will actually do what I ask is minuscule. But of those people that do what I ask, you will figure this out. You will figure it out if you commit yourself to it. So again, I continue to encourage you, stick with us. You can do this. Let's jump into the charts. We see the S&P 500 has ended the week with a green spinning top, still down on the price percent weekly oscillator. So the price percent oscillator is still down. Derivative oscillators just barely negative, and we ended with a green spinning top, indecision, tending up, but still confirmed down. So again, the pressure on the market is still down. We go from, and it was up for the day, 1.03%. We go to the two-day chart. We see the first day of this latest two-day candle. This just represents Friday. It is a big up candle. And again, that's showing the average pace has really moved up. But again, things are still on the two-day chart, still confirmed down. Still confirmed down on the two-day. So again, the pressure, even on the two-day chart, now it's blown through the weekly, has already blown through the two-day. I'm talking trend lines now. So again, we see the price percent oscillator heading up. It hasn't crossed yet. So again, pressure remains down, although it is moving up. Doesn't mean we're jumping into any up practice trade at this point, because our two biggest price percent oscillators, the two-day and the weekly, are still down. So we'll let them control. We'll pay attention. We see that 4-hour chart, which crossed over going up back on the afternoon of Wednesday, has been up, pulled back a little bit in the afternoon on Friday after really bumping up in the morning. But again, we'll watch, wait and see. If for some reason the market hammered down on Monday, might give you a consideration for a jumping in point with perhaps more continued down movement. Maybe not. We've blown through, like we said, the two-day and the weekly trend lines. We'll just wait and see, and we'll let that two-day candle finish drawing on Monday before we make any final call on that. That's where we are in the S&P. The Q's up the most for the day, 1.29%. It ended with a green spinning top, indecision tending up. Price percent oscillator a little less than flat, heading up a little bit. Derivative oscillator still negative. So the overall sentiment of the NASDAQ 100 still down. Two-day closer and closer to crossing over. Big green up candle, first day of the latest two-day candle, blowing through the weekly, like the S&P had already blown through the two-day down trend line. So the 2 days pushed up through it. We go to the 4-hour chart, and again, it crossed over all the way back, going up all the way back on the morning of Friday, the 4th of October. And of course, up in the morning, sort of sideways in the afternoon. And again, waiting to see what's going to happen. When is this up movement going to peter off and move down, crossover going down? Might do that, might not, might continue to move up over the course of this next week and pull the 2-day over and then eventually the weekly. We'll just wait and see. It could all fail, roll back over, and we might have an opportunity for a down practice trade. We'll see. Now, we're going to go, so there's nothing going on as far as the S&P and the Qs goes for any trading opportunities at this point. Over the course of the next week, we will be looking to see if that 4-hour chart crosses over going down. If it does, it might give us an opportunity to jump in. Now, to what I mentioned at the beginning of the show, I want to show you what we have going with this practice trade right now on TLT. Down again, down 1.24%. Ended the week with a red doji. Doji is again the most uncertain of our candles. It shows lots and lots of indecision, tending down since it's red. We see that the price percent oscillator is peeling away nicely from the red signal line. Derivative oscillator has now for 4 weeks been gaining downward momentum. That's good, well and good. And remember, we had that crossover going down back on the week ending the 27th of September. We go to the 2-day chart. First day of the latest 2-day candle, big down candle heading down. We sort of bounced off that red signal line back on the week ending the 8th, never crossed over, going up, got close. And then, of course, in the prior week ending the 10th of October, that was a down week, but nothing like the week that we've, forgive me, I'm getting back to the weekly chart, 2-day chart that represented both Wednesday and Thursday, down candle. The first day of this latest 2-day candle, big strong down candle. Price percent oscillator has flipped over. Remember, candle's not drawn yet until Monday, but it is heading down. It's just the first day of the latest 2-day candle. We go to that 4-hour chart. I'd been telling you guys, watching. It took a long time after that 2-day chart crossed over going up. We had the weekly finally cross over going down back on Friday the 27th of September, and patiently I waited, telling you guys, hey, whenever you see bonds cross over going down on the 4-hour chart, if that 2-day and weekly haven't crossed over going up, get on it for a practice trade. Well, it finally happened. When did it happen? Happened in the morning on Wednesday. And again, the jumping in point for the practice trade would have been around noon at the close of that first candle. And of course, somewhere around the 144, we'll say 144.50 mark, something like that. The jumping in point was all the way down to a low so far of 139.71, and that is in 2.5 days. That is not bad in my book, my friends, not bad at all. Why did I see this coming? I just kept watching the 2-day, kept watching the weekly, kept feeling strongly that with those not crossing over, bonds may very well roll. And of course, we watched it, and when they did, that was our jumping in point for our practice trade. It has gone well. How long do you stay in? Well, again, that's where you have to have experience as to what you've seen in the prior moves, what you've seen as far as the reliance on the 2-day and the weekly when you start seeing them soften, when you feel like you have made enough on that trade based on your prior practice trades on TLT, whether you're giving that a percentage, whether you're using recrosses of trend lines. That is up to you, my friends. That's the magic that you develop by practice trading again and again and again. It's what cannot be taught to you. It's what you must learn from practicing. That's why we say, fill out the free trade worksheets that you have attached to your show notes every day. It's a PDF. I hope you're filling out your weekly market worksheet. You should at least do that once a week. Gives you that big bird's eye view of where all these charts are once a week on Friday to be able to mull over to help you make your decisions for your practice trades in the coming week. So again, do those things. It really, really helps. Pearson's Law, I continue to push, which is about how when you note things down, you analyze things in writing, it makes it so much more valuable to you. Study Pearson's Law. In fact, it's so important, I want to put that training in the show notes today, again, for those who have not read it. The father of modern statistical analysis gives us a great lesson. Don't care too much for the guy. He was a eugenicist, a lot of bad things about him, but he was right on this issue. So that's where we are on 20-year bonds. They're looking good. Again, continue to pay attention if you are in that trade. I hope that you've already put in, the minute that you put in your purchase order for your practice trade, that you also, or you wrote it down on your sheet, you also went ahead and, at least in your own mind, entered your good till canceled sell order for the practice trade, so you know when you would have gotten out when you practice this. So now let's leave 20-year bonds and finish up as we always do with gold. Gold down for the day, 0.55%. Gold crossed over going down on the weekly chart back on the 27th of September. And what did gold do after that? Really sort of headed sideways. Only in the course of this last week did we see it really start dropping again. It sort of held in about the same area. Didn't, however, hit the peak, the lows that it had hit in the prior week, but we do see price percent oscillator pulling away nicely from the red signal line. Derivative oscillator over 4 weeks gaining downward momentum. Go from the weekly to the 2-day. First day of this latest 2-day candle, nice strong down candle forming. Price percent oscillator heading down. Derivative oscillator gaining downward momentum for the first time since, gosh, the 30th of September. So that's nice to see. Remember, candle's not going to finish drawing until Monday. So we'll continue to watch that. And we go to the 4-hour chart. Did you catch it in the morning when it crossed over? Pull back a little bit in the afternoon as far as our Heikin Ashi candlesticks goes. But again, that's what gold was doing for us, setting us up. We told you to watch that. Hopefully, you considered a practice trade on that. You'll pay attention, see what there is to see on gold, and if it's going to continue. And again, let's take a look at that 2-day chart. 2-day chart. Moving down nicely, looking nice. Of course, we'd rather see it plumbing deeper than it had down back on both the 30th of September and the 2-day candle ending the 2nd of October. But it is a nice red down candle forming. Continue to watch it on Monday. See that it continues to go that way. And of course, that weekly is, again, not hitting the lows it had before, but still price percent oscillator main indicator going down. So hopefully, that will be a good practice trade for you in gold. Now, that's it for the week, folks. Please continue to dedicate yourself 10 to 15 minutes a day. Lots of great training. Want you to read over the weekend. Well, listen to the video that we have loaded in the show notes for you on Pearson's Law. I want you to get all that. If you're not currently a subscriber at chartingwealth.com, you're not getting all the special training we're putting out every day. How do you do that? You go to chartingwealth.com, sign up, put in your name, email address. We never spam that list. We'll get it out to you. If you haven't purchased our book, Charting Your Way to Wealth, well then get supercharged, my friends. Find out what we do here, the down and dirty on it. Buy the book. We appreciate your support. You'll see the link in the show notes. And again, to all of our Patreon friends, thank you so much. If you love the charting software that we use, those who are watching the videos, that is from TC2000, the paid version of freestockcharts.com. We have $25 off if you want to subscribe. Follow again the link in the show notes and get that discount. All the best, my friends. Have a great weekend from the whole team at Charting Wealth.